Welcome to The Explainer. Okay, let's dive into this. We're unpacking a really timely presentation from Deko Capital today, titled Why Value-Add Multifamily Still Works Today. If you've been tracking the real estate sector lately, you already know the ground is literally shifting beneath our feet. I mean, the rules of the game, they've fundamentally altered over the last couple of years. Strategies that seemed basically foolproof a decade ago are suddenly struggling to hold water. This explainer gives us a blueprint for how top operators aren't just trying to survive right now, but actively thrive in this completely new environment.
I want you to imagine for a second that you're navigating a pretty harsh new economic landscape. You know those amazing tailwinds that used to effortlessly push your investments forward? Yeah, they've completely reversed into gale force headwinds. And that brings us to the absolute core question of our era. How do you actually generate wealth in real estate when interest rates skyrocket, when the cost of borrowing money doubles or even triples? The traditional math just completely breaks down. You can't just buy a building, sit on your hands for a few years, and sell it for a massive profit just because the whole market floated up, right? That era is dead and gone. So what exactly is a proactive investor supposed to do?
To figure that out, we really have to face the harsh new realities of the market head-on. Deko Capital identifies three massive macroeconomic headwinds that are driving this whole shift. First up, higher interest rates. Borrowing money is just incredibly expensive right now, and that eats straight into your cash flow. Second, tighter lending. Banks are jittery. They're demanding more money down and way stricter terms before they even think about issuing a loan. And third, increased expenses. Inflation hasn't just spiked the cost of your groceries. It's hit insurance, maintenance, labor, materials, the whole shebang. For a real estate operator, the cost of running a building has shot up right when the cost of buying it has become super prohibitive. It's basically a perfect storm.
Now, to fight back against that perfect storm, Deko Capital points straight to value-add multifamily. As a quick refresher, this approach is all about actively improving properties, like your typical apartment buildings, to essentially force appreciation, rather than just passively waiting around for the market to rise and bail you out. Instead of just riding the tide, you are the one taking control. You're getting in there, upgrading units, fixing those glaring inefficiencies, and making the building objectively better, and way more profitable. By doing this, you're manually pumping up the value of the property through your own strategic execution, literally regardless of what the broader market is doing. This really brings into focus all those outdated assumptions that investors just cannot rely on anymore. Think about past strategies for a minute, betting on organic appreciation, practically free debt, and just general market momentum. For years, cheap debt and a red-hot market could basically cover up a lot of sloppy errors on a purchase price. Investors just rode that wave of momentum. But listen, those assumptions, they are totally broken today. If an entire investment thesis requires historically low interest rates and endless appreciation just to break even, man, that investment is exposed to some massive, massive risk in our current climate.
And this brilliantly illustrates a hard transition we're all seeing, going from an old reliance to a totally new necessity. The old reliance was all about cheap debt and market momentum, right? It was completely passive. It relied on external forces just magically acting in your favor. But the new necessity, that is entirely about improving the asset itself. It requires getting your hands dirty and rolling up your sleeves. We're talking a solid business plan, precise execution, and real operational excellence. The operator is no longer just some passive passenger on the real estate train. They have to actually be the conductor driving that value forward.
So you might be wondering, why does value add actually still work when literally everything else is struggling? Well, it's because the core focus is purely on improving the asset itself. This strategy survives because it essentially tunes out all that macroeconomic noise that you can't control anyway. Like, whatever the Federal Reserve is deciding to do with interest rates on any given Wednesday. Instead, it hyper-focuses on exactly what you can control. Because if you make a building a genuinely better place to live, it just becomes more valuable. It's a fundamental ground-level business strategy that builds this incredible protective moat right around your investment.
Let's move to Deko and see how this builds into a concrete step-by-step formula for actively creating value. Deko Capital breaks it down into 4 highly disciplined steps. Number 1, rent increases through renovations. You update the kitchens, maybe throw in some fresh flooring, and suddenly that unit commands a higher price because, hey, it's just a better product. Number 2, better occupancy. By making the property nicer and managing it like a pro, people actually want to live there, and they want to stay longer. Fewer empty units equals way more consistent revenue. Number 3 is operational improvements. This means bringing in professional management, utilizing better software, and really streamlining the day-to-day. And finally, number 4, expense control. To fight rising costs, a great operator finds those hidden efficiencies, renegotiates vendor contracts, and plugs up any financial leaks. Combining these 4 steps drives the net operating income up, which mathematically forces the property's overall value up.
So the crucial point is perfectly summed up in this really powerful takeaway from Deko Capital. In today's market, disciplined strategies like value add aren't optional, they're essential. Really think about the weight of those 2 words, optional versus essential. We aren't just talking about picking one valid way to make money over another anymore. We are talking about downright survival. When the easy money disappears, discipline is literally the only thing left that protects your capital and still generates a solid return. Active management and a highly structured value-add business plan, they are absolute necessities for anyone serious about real estate in this decade. As we wrap up this explainer, I want to leave you with a bit of a challenge, a question to help evaluate your own portfolio. I want you to look at the assets you currently hold, or maybe the ones you're thinking about picking up, and ask yourself honestly, are your investments relying on yesterday's momentum, or are they actively building value for tomorrow? Because if you're just sitting there hoping the market goes up, you might be in for a really rough ride. But if you're focused on rolling up your sleeves, actually improving the asset, and forcing that appreciation through disciplined value-add strategies, well, then you are building real, resilient wealth. Thanks so much for joining me on this deep dive. Keep learning, keep analyzing, and definitely stay disciplined out there.